How's it going, guys? I know it's been a while since I dropped a video. I just wanted to record a trade recap for you guys today. Let's go ahead and get into it. So today's date is 10 to 2024. I'm going to show you what happened throughout pretty much New York session, just a trade recap. Um, so as we can see, this is let me make sure. So today's Wednesday. So as you can see, this is Tuesday's candle that happened right here. So this is Tuesday's high, Tuesday's low, Tuesday's high, right there. I hit the wrong button. No, so this is Tuesday's high, Tuesday's low, and Tuesday's high right here. So so the high wasn't taken out, the low wasn't taken out. So today was just pretty much inside this whole candle. You might as well call it a hoagie because this didn't take out the low or the high. So I don't want to go ahead and label that because it's gonna take too long. But low, Tuesday high. So if you go to the forward, you can see everything that happened inside today. So I mean, this is pretty much all the price action we had inside today, Tuesday's high and Tuesday's low. So as you go down in time frame, you get to see the picture a lot clearer. So if you go to the 4 hour, right? So this is the 4 hour. Now we don't really care about all this price action because this is everything that happened today. And I mean, what to go Tuesday. So Tuesday, yeah. So everything that happened today on Wednesday. So one of the good things about it is I have the trading session indicator. You can go ahead and get that. This just lets you know the session, so that way you can look at the what's called the moves that happened during the session. Okay. So we are going to go ahead and turn this on. Looks like I have. Okay, no, we want New York session. So green. So let's go ahead and go down into. So when the day opened, we had this huge bearish candle to the downside. As you can see, we pushed down, and all this happened. But most of the time I'm looking mostly from the 2 minute time frame. I also have the Fibonacci chart open right here because it kind of shows you pretty much you get to see clearer price action than you would with the Chinese candlesticks. So I mean, you can see the difference from over here on the different types of chart. Every pullback it shows you on the chart, but on Fibonacci, it just shows you a clear pattern, which is what I like. So I'm going to be showing you guys pretty much everything that happened with this one. So now this move, I remember this is what happened this morning. I didn't take this move because I was skeptical, but it did play out. So there's an order block here on the 2 minute time frame. First of all, this low was taken out over here. So some sellers came into the market at this time, right there. So this low BOS was broken right there with this candle. It didn't close strong. It didn't close only like we would have wanted. But as you can see, this happened. 8:30 happened right here. The market pushed into this order block, then just straight throughout dumped. After that happened, we also still do have this break of structure that happened right here. Break of structure that happened right here, and it just pushed down. So I mean, there are different ways you could have interpreted this whole move right here. So I mean, sorry, let me get that correctly. Yeah. So regular structure, there are different ways you could look at this. I mean, you could saw this candle's low was violated. So if you want to enter as soon as this low was taken out, you could have entered right there, you know, right there. Push stop us at the high and pretty much keep trailing candle by candle. So as soon as that low is taken out, right, as soon as this candle closed, you move your stop loss right here, stop loss right there, stop loss right there to eventually cut this whole trade. You'd probably get out there would be no TP. You'd probably get out somewhere right here because, like I said, you're drilling by every candle, every candle, every candle. So if you got in right here, I mean, you're looking at, let's see, okay, 150 ticks, which is not bad if you do the math. Let me see. So that'll be 5 times 150. So yeah, about $750 if you went in with one contract. According to your stop loss, which was, let's say, 130. Yeah, so 650 was your stop loss. You made 750. 650 was just your starting stop loss. So if it went against you, I guess you would have lost 650. But obviously the market was going down, so as long as you trailed, you should have been fine. Um, but so that's what we're looking at. But that's just one way to look at it. But the main move we missed was going to pretty much this order block over here. So I mean, there are different ways. Most people would have entered as soon as this order block broke right here. I was stingy because I wanted to get the perfect entry, so I should have got in, but I did not. But I mean, we can all say that in hindsight. But so some people would have gotten right here. So entry right there. As soon as this low was taken out with this bearish candle, stop loss over there at the high. So and since we were targeting all the way over here, 1 to 3 risk to reward. My roommate actually caught the trade on his account, on his funded account. Dude has like 10 funded accounts. He can only trade three because my funded futures don't let you trade three accounts. So dude has like 10, 7, 50K account on hold up just in case he blows any other account that he has. So I mean this was a good trade. Um Other than that, something I did take another trade again. I took this trade in more at this order block. The market came here. I was expecting the market to, reverse and push back down, but the market did not. So I lost that trade over there, which was fine. So after we took that out, I mean, the next thing would be since this high was taken out, since this high was taken out over there, then we had these candle push up, push up. Something you would have noticed is trades like this order block trade respected itself. So the market pushed up, came back, tapped it, and pushed all the way up again. Same thing happened right here as well again. So if you had, let's do this, okay? So if you had got in right here on this break, right there, so break constructor right there, you put your stop loss over here, and you were targeting right there, you'd call it 1 to 4 if you want to be conservative. But if you always want to go to a positive resource, so 1 to 2, 1 to 2 would have got you right there, would have won that trade. Okay, so this was the first trade. Now the second trade is going to be this second order block over here as well. So if you got in right here, if you got in right there, you do the you would target this buy side over here, so like almost a 1 to 3, but a 1 to 2.6. So if you risk $200, you would have made $400, and it goes up. So stuff like that. I mean, same thing happened again. So we had breaker structure over here. So breaker structure happened over here. We had this order block. As you can see, the market didn't come back to tap it. So we're gonna leave this open. So this order block's open because the market never came back to tap it. Then we had this order block over here. The market, as you can see, the market took it out and then pushed back up. So this would have been a bad trade. You would have lost this trade. It happens. You can't win every single one of them. But as you can see, if you've taken out these 3 trades, you would have made some money. I mean, these 2 trades. So let's say you risk $200 on this trade, so you would have made 400 on the first trade, 400 on the second trade, so you're up $800. If you lose this, it's just $200. So regardless, you're still profitable as long as you have the profitable risk to reward. Okay, so if you move on over here as well, reconstructor happened right here. So right there, as you can see, the market tapped in right here. Stop loss at this low. If you're targeting 1 to 2, you'd hit that. But if you were targeting the buy side, you would have lost that. Or if you had trailed, you should be fine because after this happened, this low was taken out right there. We push up, so we put your stop loss at break even or under this low, so you would have lost maybe 1 tick or whatever it is. But so it happens. That was the trade that happened over there as well. Um, so something else that happened is this one. So this is what caused the push to the upside. So this is the low. So the market took this, and as you can see, came back, played around. So something like this would have been tricky. So if you took some trades, you would have lost because I mean, breaker structure, the market took it out, come back. We had this breaker structure right here. The market came back, retested, played around, pushed down, and eventually went back up. So you'd have lost this trade as well. Now this one. Oops, sorry, wrong tool. Okay, so this is what happened. This low was taken out right there. You can see the push down, then started playing back up there again. I probably got caught up in this because I was trying to short the market after this move to the downside. I thought we were gonna keep going down, but the market has some momentum, pushed all the way up, and eventually came back down over here. Um, Something that's about to happen is if you had taken right there. Well, I don't think most people because this was almost the end of the session, so we wouldn't be waiting for the retest to push back down. But if you did take it, you would have lost that trade. But so I mean, you guys can pretty much see the setup that everything that happened today, all the available trades you could have taken today. Okay, so these are all the available trades today. Order block trade from over there, push down. We lost that one. Order block trade. This market came back in here. So if you're taking that trade to the high, you would have won that trade. Okay. Order block trade over there. Order block trade over here. That one. Okay. So one, two, three. No, one, two. Okay. So two trades. That netted you $800. This trade didn't happen. You lost this trade. So that'll push you back at 600. And some people might say, you know what, I'm done for the day. I go do something else and do whatever. If you want to keep trading, you know, some of the bad trades that you have would have put you maybe down, maybe up $200 for a day. But like I said, I'm using $200 because sometimes I on 50K can I use mostly risk 200 per trade. But this is pretty much all the opportunities that we have today in the market. Okay, so I mean, try the Hignachi chart out. I mean, it makes it pretty much clearer for you. You get to see all the setup. You don't have to worry too much of a noisy chart. But this is everything that happened today. I hope you guys like it. Please enjoy. Like and subscribe as well. Thank you.